Canadian home sales in cities like Toronto, Ottawa, and Montreal ended 2019 on a strong note. Let's get a sense on where things stand as we begin the new year. Royal LePage often takes a look at the health of Canada's real estate sector. Phil Soper is the CEO, joins us here in studio. Happy New Year. Nice to see you,
Happy
Phil.
New Year to you, too.
So we mentioned a couple of key cities there that showed some signs of strength at the tail end of last year. How would you describe the housing environment right now?
It's back on track. We had the biggest correction in a decade in 2018 and the first half of 19. There's obviously something that hasn't got a lot of play. There's some pent-up demand there. You know, people didn't stop having babies, graduating school, arriving in Canada. So the housing demand was rising. But with the introduction of the mortgage trust, SB20, people and consumer confidence were pushed to the sideline. But the job creation machine continued to chug up. Consumer confidence overall was strong. It was just housing that took the hit. So we got a little bit of a bump in the fourth quarter. I don't think we should say that automatically goes for the whole of 2020. In fact, our forecast is for about half the price appreciation as we saw in the fourth quarter. So call it 3% in 2020, and we saw 6% in the fourth quarter.
And would it be the same thing you just talked about, the fact that at the end of the day, more people coming to this country, people who need a house, like that ends up being the driver for this new year?
Yeah, you're bang on. And remember, it's very regional. So we have the demand from a large cohort of people rolling into home ownership. That's our millennials. More of those than baby boomers. We have new Canadians, which the governor talked about. We also have interprovincial migration into our frothiest cities. So we have people moving into the GTA, the Lower Mainland, to BC, and even into Montreal.
Is froth a fair characterization in certain markets?
Yeah, I tend to use overshooting, but it's the same sort of idea. It's the fundamentals say prices should be rising here, and they rise more. You get the multiple offer situation we saw so much of in Toronto, the 10 to 20 bids on a single property, and that can't but help to put unrealistic pressure on prices.
And so this seems like it's going to be one of the key things that the Bank of Canada is watching this year. How does interest rate policy factor into that? Several times over the last couple of months we've talked about, well, the Bank of Canada didn't cut rates last year. If they felt there was enough softness in the economy, not that we're necessarily seeing strong signs of that, but if they felt like, okay, well, maybe we should cut, it feels like they are very mindful of what that would do in the mortgage market and maybe to home prices.
Well, there's likely no industry except maybe financial services itself that's more interest rate sensitive than housing. And paradoxically, a cut in interest rates because the economy is faltering could actually spurn the real estate market onto more price inflation.
You raised an interesting point. You talked about millennials graduating to home ownership, or maybe moving, let's say, from a condo to a detached home,
they have kids.
Whatever it may be. There's been this kind of growing, we were talking earlier about the gig economy and Uber, that maybe millennials just don't want to or will have a different view on home ownership going forward. I mean, I've heard this at dinner parties, people saying maybe we should sell our house now because maybe future generations are going to feel very differently about home ownership. Do we see that in the numbers, though?
We don't see that in the research into intent. Okay. In the numbers, about 40% of millennials already own a home, and the home ownership rate is 68%. So there's a gap there, but they're young. The oldest millennials are 35-ish. What the research shows is that 87% believe in home ownership, owning a home, and they don't believe in cars to that extent. I think it's because they're appreciating assets versus depreciating assets.
Sure, makes sense.
Yeah, so it's not very exciting for a kid to invest in an RSP when they're 25 or 28.
Right. Okay, so let's talk about the math here. Yep. Home prices in select cities, a couple of years ago, they're going up, up, up. We go, holy cow. We see the mortgage stress tests implemented. We see this downturn in prices. Here we are. You're talking about home prices appreciating again. A lot of people have jobs, demand for the housing sector. If you're someone who was concerned about affordability, it almost might feel like you snapped your fingers and that window maybe gone. I mean, how do we tackle this issue for those who do want to? We're all kind of invested in this story, isn't it?
No, absolutely.
How is that going to be tackled, do you think?
I think it's a longer-term solution by policymakers. The three levels of government have to look at supply and the amount of time. It takes much, much longer now to get a project, a housing project, be it a tower, or a neighborhood of detached homes, from idea or request into shovel in the ground. We need to compress that, and it's a multi-level problem. Like healthcare or education, it's big. It won't be solved overnight, but unless we focus on it and look at the long term, we're going to suffer for some time. So that's one. The second one is we are in a more modest time now than we were in that. If you look over the last 20 years, it was really just 15, 16 that we saw outrageous price appreciation in that 20+%. For most of the decade, it's been single digit, which is manageable. So 5% is the long-term house appreciation number, call it 60 years. If you get above 10%, that's when I get concerned.
Okay. Before you go, just a little off topic. People who are in the greater Toronto area might have heard about this story over the weekend. The Pickering nuclear plant sent out this false alarm, which worried a lot of people. I am curious when you're reminded of the housing, and there's a lot of it in Pickering around the nuclear plant. Is that the kind of thing that can impact home prices?
If we had a real issue, I'd say yes. For a warning, no, it's not that people have a lot of options. And it's, by the way, home prices in Pickering are they're up 9.7%. It's one of the...
Sounds like you almost used that word frothy.
Yeah, right. So, but a little bit farther out in Oshawa, they're flat. So Pickering is one of those suburban communities where affordability still exists. It's a lovely community. It's right on Lake Ontario. That's why the nuclear plant's there.
Yeah, exactly.
And it's one of the oldest, safest nuclear plants in the world. I think it's more a case of government, issue rather than political process versus engineering.
Indeed. All right. Well, Phil, thanks for breaking it all down. As always, appreciate your time. Phil Soper is the CEO of Royal LePage with a snapshot of the Canadian housing sector.